volatile session yesterday due to a confluence of events that took shape, where we see a movement on the US stock market where it starts to shade in the red at the start of the US session, but managed to rally after hitting various key support levels towards the last hour of the US trading session yesterday due to a confluence of events, which is the key Q4 banks earnings, geopolitical situation arising out from Iran. And very interestingly, we start to see a fresh all-time high being hit on silver and gold price due to safe haven demand. And in the FX market, the US dollar strength got halted due to a minor revival of the Japanese yen due to intervention fears. And oil price managed to stage a yo-yo session yesterday. Its earlier gains got eradicated. And as we are speaking right now, West Texas crude oil is down almost 2% after US President Trump backed down on his military invasion in Iran. Very good morning to all. Welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Thursday, the 15th of January 2026. So let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. So let us have a quick recap what has taken shape yesterday. So let us start with the news flow first over here. So yesterday we do have this geopolitical risk premium rising coming up from the US side of the story, where US actually authorized some military personnel to withdraw from Middle East bases, okay, amid Trump-Iran threats. So the reason why they asked the US, we call it personnel, to withdraw from these Middle East bases, because that there could be fear of Iran retaliation towards these military bases, like the bases in Qatar. So that actually caught market attention and saw the earlier sell-off in the risk assets, and where we see the US stock market started the session in the red, all right, over here, both on the S&P, the Nasdaq 100. I think it's a bit slow. And as well as the Dow Jones Industrial Average, all right? So all the major stock indices sold off in the first 3 hours of the US session, and the losses extended further into the earlier half of the we call it a portion of the second session, before staging a bullish reversal right at 2:30 a.m. Singapore time. So that's towards the end of the US session. So overall, what we could see over here is that by the end of the US session, we see the top performer being centered on the Russell 2000, which is up by 0.7%. So that shouldn't be a big surprise, because since the start of this year, I've been mentioning the potential outperformance of the prior laggards, Russell 2000, one of them, trading in the positive territory by the end of the US session after removing its earlier losses, up by 0.7%. And even the Dow Jones Industrial Average being dragged down by several major we call it banks stocks that closed in the red yesterday, but managed to inch back up to the almost unchanged mark, close negative 0.09%. So that's almost unchanged, led by positive outperformance that's being seen on other component stocks like the healthcare stocks and as well as industrial stocks. And the worst hit was the Nasdaq 100. Yes, it recovered at 2:30 a.m. Singapore time, but still managed, still close in the red with what I call it more than with almost a 1% loss, down by negative 1.07%, and due to this underperformance of these mega technology stocks that I have mentioned, that over here is that we are now seeing we call it a play of sector rotation away from that over highly valued mega cap technology stocks that center on AI optimism back into companies that has a lower valuation, like industrials, utilities, healthcare. And the SPX, due to its heavier weightage in these mega cap technology stocks, is unable to get unscattered, and is down by negative 0.5% over here. And very interestingly, if you look at the banks, major banks banking stock yesterday got hit due to this Wells Fargo and Citigroup negative price reaction. So let's talk about Citigroup first. So Citigroup yesterday reported their Q4 earnings results over here. So everything looks very, very perfect in terms of the net interest income and as well as the overall bottom line that managed to beat expectation. But however, due to the press conference, one analyst actually pressed the management regarding about some regulatory issue over here. So let me share with you where is Citi. This is Citigroup. All right. So Citigroup shares slump on CEO tempers expectation on regulatory penalties. So there's some regulatory issue that are being pressed by one of the analysts during the press conference, and that causes a negative feedback loop in Citigroup shares over here, right? So basically, this is what over here. So CEO Jane Frozer and CFO Mark Mason expressed caution on trim guidance on the firm's efficiency ratio after an analyst suggested Citigroup would shed its regulatory penalties this year. All right, and Wells Fargo also was one of the contributor to that negative feedback loop in the major banking shares yesterday, where Wells Fargo share for the most in 6 months after profit miss. So overall, the bottom line, Wells Fargo missed analyst profit estimates as sovereign costs drove up expense. So this is more like a one-off issue where they try to streamline their workforce. So we know that streamline workforce in US, they do have a very much more stronger union, and they need to pay this kind of sovereign packages to lay off workers. So that causes the expense to rise over here. So the banks overall spend in Q4 612 million on severance packages. So that is also one of the negative feedback loop in the banking sector yesterday in the US stock market. Despite the fact that we have one rising star among the bank's earnings result yesterday, where Bank of America smashed market expectation in terms of their trading division and as well as their lending division as well that rose above expectation. So what you can see over here is that overall their net interest income rose 9.7% year on year, and topping analyst estimate, and also the companies issue a rosy guidance for the first quarter of this year and expect NII net interest income to rise further to 7% year on year for the 2026 first quarter over here. But however, due to the negative general sentiment on the banking sector yesterday due to Wells Fargo and Citigroup, Bank of America is not able to capitalize on its own better than expected earnings results over here. So that if you look at the heat map of the S&P 500 yesterday, we see a slew of red in the major banking stocks, where Bank of America is down by negative 3.78%, Wells Fargo, the worst hit, down negative 4.61%, Citigroup down by negative 3.35%. And that also spread on to Morgan Stanley as well, down negative 1% as its earnings results is due today, and Goldman Sachs down negative 0.58%. But if you were to combine the entire banking sector as a whole, taking into account of other smaller regional banks and other asset management company, the results is much more on a rosier footing. So how do we analyze that? By looking at the ETF, which is the let me expand my screen, which is the SPDR S&P Bank ETF. So this bank ETF, in short, the ticker is KBE. So this KBE is actually a sector that has all the various banking stocks inside it. That means it includes the major financial institution like Citigroup, Wells Fargo, and as well as smaller regional banks. So this allows us to give us a healthier, much more, we call it gauge of the performance of the banking sector in the US. So yesterday, it managed to rose 0.95%, that beat the S&P 500 and as well as the Nasdaq 100. And also its relative ratios, where we get the KBE divided by the S&P ETF, continues to show outperformance as it trade above the rising 50-day moving average and inside this ascending channel since the low of 17th of November last year. okay, indicating banking share outperformance against the general market using S&P 500 ETF as the gauge for the general US market. So overall, despite that negative feedback loop that we've seen in the last 2 days upon the release of this major financial institution earnings result after price action reaction of them, like Bank of America, JP Morgan, Wells Fargo, and Citigroup so far, it didn't create a negative dent on the broader banking sector by looking at the performance of the KBE ETF share price, which is the SPDR S&P Bank ETF that covers a wider scope of the banking industry in the US. So overall, we are still seeing a healthy movement on the banking sector depicted from a technical analysis perspective. So that I'd like to share with you guys. All right. So with that, very quickly, let me take you through the S&P 500, the Dow Jones Industrial Average, and the Nasdaq 100 cash market performance yesterday. So starting with the top performer is the Russell 2000. So this is the daily chart of the Russell 2000, the cash market. That means taking into account of the start of the US session and the end of the US session. Continue to see strong bullish impulsive move since the bullish breakout of its former all-time high on 12th of December. Over here, let me expand it so you guys could see. And the next one will be the Dow Jones Industrial Average. Yesterday, managed to end in a bullish hammer candlestick formation right above the 20-day moving average. So this is the Dow Jones Industrial Average daily chart on the cash market. The S&P 500, which is the laggard, but it also formed a bullish hammer at the end of the US session. All right, test the 20-day moving average, form a bullish hammer. So technically speaking, the trend is still positive. All right, and on the laggard, which the most lagging behind is the Nasdaq 100, also managed to form a bullish hammer after yesterday's US session close. So bear in mind, this is the cash market. So I'm taking into account the cash market, studying the market participants' behavior during the US session, where we start to see a bullish hammer candlestick that's being formed towards the end of the US session and right exactly at its 20-day and 50-day moving average. So that's also a positive observation as well. So despite yesterday's earlier sell-off in the major US stock indices, we do not see any signs of potential significant technical deterioration in the market based on this cash market movement on the 4 major US stock indices that I shared with you guys during the US session. All right. Now, what causes the market to react positively towards the end is due to Trump's remark. So we know that he tends to be a very erratic person. So yesterday, towards the end of coming close to the end of the US session, he did mention that he may indicate to hold off attacking Iran for now, after saying that he was reassured by sources on the other side that the government in Tehran, which is Iran capital, would stop killing people involved in the current widespread protests. So it seems to be that he's trying to flip the brata again by backing off US possibility of attacking Iran directly. So that causes the US stock market to rebound yesterday. All right. So yes, this is the first segment of the daily dose I share with you guys that involve the key events that has taken shape yesterday and how does it react to the market. And before we jump into the so-called the charts of the day, so today will be the charts of the day. Let me share with you quickly what is taking shape in the FX market. So overall in the FX market, we start to see this K-shaped performance that is being taking shape, where the dollar yen continues to trade rather firm. So yesterday we do see a bit of profit taking in the dollar yen over here before hitting up again during the Asia session. So right now, based on a 5-day rolling performance, it's a very short-term time frame window in the past rolling 5-day. As of now, we're speaking 15th of January, 11:18 a.m. Singapore time. There's this K-shaped performance that is taking shape, whereas the upper K is the dollar yen surging past against the other major currency that try to trade sideways. So what you could see over here is that the dollar strength is still much more prevalent inside the Japanese yen rather than against other major currency. So the reason why the dollar yen is trading so strong is because of this impending snap election that the current Japanese administration might call, I think around next week, a couple of weeks time, to hold a lower parliamentary house election in early February. So given the fact that if this turns out to be true, there's a high chance that the current ruling coalition party, which involve LDP, PM LDP party, could win more seats in the lower parliament due to the current PM strong popular ratings right now among the masses. And if this starts to take shape, she could push up for more expansionary policy, and that could potentially hinder the current Bank of Japan gradual interest rate hike policy stances. So that causes the dollar yen to trade firmer in the last 5 trading sessions. But however, later I'll share you the chart of the dollar yen. The dollar yen yesterday back off after hitting its risk, the intervention level, okay, the intervention zone over here. All right, so that is for the FX market. So let us now share with you the charts of the day. All right, so by sharing the charts of the day, let me expand my screen first. All right, so that you guys could have a better view of the charts. All right, so chart of the day will be focusing on the precious metal, given its very strong up move yesterday to fresh all-time high. So let us start with the gold. All right, XAU/USD. So for gold XAU/USD, it hit the first resistance level yesterday at 4,645 before trading sideways. All right, so what you could see over here is that the RSI now is coming back down to the oversold level. So key levels to look out for will be the former all-time high / 4,550 / 4,560. That could be a pullback support level to watch. Pivotal support will be the gap up that's being seen on Monday, the previous 12th of January, which is this Monday, which is at 4,512. And if you do the Fibo retracement of this last minor impulsive up move from the low of 8th of January last Thursday, it coincides with the 50% Fibo retracement. So right now, potential minor pullback, but potential minor pullback may come close to an inflection level for another round of bullish impulsive up move potentially on gold XAU/USD, watching 4,519 as my short-term pivotal support level to maintain this ongoing short-term intraday bullish outlook on gold XAU/USD. Next two resistance level to watch after 4,645 will be 4,684 / 4,687, followed by 4,720, which is a Fibo extension cluster level. Only a bearish breakdown below 4,512 will negate this bullish bias to see a deeper minor corrective decline to retest the rising 20-day moving average that is confluencing as the next intermediate graphical support zone at 4,430, 4,403. The next charts of the day will be its cousin, silver XAG/USD over here. So for silver, it smashed into a fresh all-time high yesterday, trading above 90.90, and right now we are now doing a pullback, and this pullback is now coming very close to its prior all-time high, which is at 86.27, 84.03. So if you do the Fibo retracement of this previous impulsive up move sequence from the low of 8th of January 2026 all the way up to yesterday's current all-time high at 93.51, that confluence with the 50% Fibo retracement. Okay, let me push it to the right side, to left side, so that you can see the retracement level. Okay, I think it's not working on the internet, it's very slow. So this is the 50% Fibo retracement over here. So overall, as long as this key inflection zone hold, there could be a chance of a start of a new bullish, okay, was it the new bullish impulsive up move sequence? So I'm watching very closely 8626 / 8403 for today as one of my charts of the day for silver XAG/USD. So if this level holds, and potentially we may see another round of minor bullish up move appearing on silver XAG/USD. Two key resistance level to watch out for today will be 90.90, a recapturing of 90.90 and the hourly close above it may potentially seek out the next intermediate resistance level at 9460/9581, which is a Fibo extension cluster level. Only a bearish breakdown and an hourly close below 84.03 would negate today's intraday bullish bias / impulsive up move sequence on silver XAG/USD to see the extension of the minor corrective decline sequence, exposing the next near-term support level at 79.86. A break below it will see a retest of this key minor swing low area at 74.07 that confluence very closely with the rising 20-day moving average. The next chart of the day I will share with you guys will be the West Texas crude oil. So before I jump on the hourly chart on the West Texas crude oil, the West Texas crude oil did a daily bearish reversal candlestick right now after yesterday retest at the 200-day moving average, and we see a bearish Marubozu candlestick taking shape right now on the intraday basis. If this bearish Marubozu candlestick continues to hold for today's entire trading session until the end of the US session, this could be a 3 candlestick bearish reversal. We call it a daily evening star after yesterday's spinning top candlestick that's being formed. So to the intraday outlook for today, it will be bearish over here after the reintegration back below 61.17, 61.35, and with the continuation of this bearish divergence that's being flashed out on the hourly RSI yesterday, we will have a bearish bias for today on the West Texas oil as one of my chart of the day due to its we call it a clear technical configuration that starts to play out on our daily chart, which I share with you guys. So using the pivotal resistance zone for today, a short-term pivotal resistance zone, 62.45/63 figure, which is the 200-day moving average, pardon me. Bearish bias on the West Texas crude oil. 3 support levels to watch out for on the intraday basis for today: 60, 58.76. A breakdown below 58.76 will indicate that the earlier push up that's being seen on the start of this week is a failure bullish breakout above this former medium-term descending trend line that we have from the previous medium-term swing high of 31st of July 2025, and reintegrate back into this range configuration that has been taking shape since 16th of December to 7th of January this year. So next support level to watch if 58.76 couldn't hold will be 57.74, which is the 20-day moving average. A breakdown below 57.74 will reinforce our view that the West Texas crude oil is still trading within a choppy sideways range configuration to expose the minor range support level at 55.75 next. Only a bullish breakout and an hourly close above 63 figure level will invalidate today's bearish bias view on the West Texas oil to see a further squeeze up towards 63.73, followed by 64.50 over here. All right, so with that ends the second segment, which I did just share with you guys 3 charts of the day. So let us now move to the last segment, which is the key events / economic data to look out for today's session. So with that, let us now touch on the economic calendar first. So today will be the Thursday over here. So for Thursday, let me share with you guys what are the key economic data to look out for over here. So this coming Thursday, at the start of the European session, we do have a UK GDP monthly figure for the month of November. So that could potentially influence the sterling pound, the sterling against the dollar, and the sterling crosses. And further down the road over here, we do have Germany full year GDP growth for 2025. That will be up at 5 p.m. Singapore time. So that could potentially influence the euro dollar, the euro crosses, and as well as the Germany 30 CFD index, which is representing the German DAX over here. And going forward, what we have is the US session. All right. So the US session will be a rather quiet session. Not much key data to chew on for today. Expect for several 2 key FOMC, we call it Fed officials, pardon me, speaking at 9:35 p.m. Singapore time, Fed Bostic speech, and 10:15 p.m. Singapore time, Fed bar speech over here. And heading into the early session on Friday at 1:40 a.m., we have Fed banking speech coming into the picture, 1:40 a.m. Singapore time. And that's the key data / events to look out for from the economic calendar for today. And now let us now look at the earnings calendar. All right, so earnings calendar today, we'll see the continuation of a couple of earnings we got to take note of. Before I touch on the banks / financial institution, we have a mega cap technology heavyweight that has a potential significant feedback loop throughout the entire global stock market due to its one of the heavy manufacturer of semiconductor chips for NVIDIA and the likes of Intel and other mega cap technology related stocks in the US will be Taiwan semiconductor stock, Taiwan Semiconductor Company, TSMC in short. It will release its Q4 earnings result later today at around perhaps between 2 p.m. to 3 p.m. Singapore time, TSMC. So that could potentially have a feedback loop in the global stock market given its significant influence in the global semiconductor supply chain. Then thereafter, between 7 p.m. to 9 p.m. Singapore time, we have the release of 3 major financial institutions Q4 earnings, Morgan Stanley, Goldman Sachs, and BlackRock. So that will come before the start of today's US session. That could also have a significant influence on the Dow Jones Industrial Average and as well as the S&P 500, something to look out for. So my apologies, I forgot to cover the key levels to look out for the US stock indices, which I indicated earlier at my start of my daily dose. So let me go back together to share with you the charts of the US major stock indices that we cover on a frequent basis, even though they are not my charts of the day for today. So very quickly, let me share you guys the major US stock indices. So for the US Wall Street 30 over here, price action did pierce below our Titan pivotal support level at 49,096, but managed to reintegrate back above it at the close of the US session. We could see over here, and managed to shape this minor bullish reversal right exactly at the rising 20-day moving average. So with that, I'll be using 48,870, 48,770 as my short-term pivotal support zone for sure for today to maintain a potential ongoing minor uptrend phase on the US Wall Street 30 that is still intact, representing the Dow Jones Industrial Average. So 2 key intraday resistance level to look out for today will be the close of this hourly Marubozu candlestick and some form of minor congestion that is being seen on Tuesday US session that will be at 49,330. A breakout above 49,330 potentially seek out the current all-time high area at 49,606 that got rejected on Tuesday. A bearish breakdown and an hourly close below 48,770 will put this minor uptrend in jeopardy and see a deeper minor corrective pullback taking shape towards the next near-term support level at 48,480, maximum the medium-term pivotal support at 50-day moving average that is maintaining this ongoing medium-term uptrend, which is at 47,870. So that's for the US Wall Street 30 CFD index. Next up will be the S&P 500 over here. So the S&P 500 also managed to bounce off from the 20-day moving average. So for today, I'll be using 6,900, 6,890 as my short-term pivotal support level to maintain this ongoing minor bullish uptrend phase on the SPX 500. So 2 key resistance level to look out for on the intraday basis for today will be 6,961. A breakout above 6,961 will see a retest at the current all-time high intraday level, 7,000/7,005 that was printed earlier on Tuesday. A bearish breakdown and the hourly close below 6,890 will invalidate today's bullish bias on the SPX 500 to see a deeper minor corrective pullback to retest the rising 50-day moving average that is confluencing at the next support zone at 6,834, 6,822. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 managed to bounce off from that pivotal support zone that we have earlier on, 25,450, 25,350. So we will continue to use this level here to maintain our bullish bias for today on the Nasdaq 100 two key resistance level to look out for on the Nasdaq 100 for today. One will be 25,602, followed by the stubborn range top where the bull can't break above it since 8th of December last year. That will be at a zone of 25,760, 25,830, pardon me, on the Nasdaq 100. A bearish breakdown and the hourly close below 25,350. Short-term pivotal support zone lower limit will eradicate this bullish buyer's view on the Nasdaq 100 to see a continuation of this minor corrective decline sequence unfolding, leading to a choppy down move drift to expose the next two near-term support level at 25,133, maximum 24,870 for today. All right, so that's the key levels to look out for and the trend bias on the three major US stock indices that we cover on the daily basis, on a frequent basis, pardon me. So with that, that's ends today's Daily Dose of Market Insights. Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.